I'm Marcia McMillan. We begin this hour with breaking news from Ottawa. The Bank of Canada once again holding its key interest rate steady at 5%. The rate hasn't gone up since July, but before that, the bank raised its rate 10 times since early 2022 to slow down inflation. The inflation rate is now down to 3.4%. Forecasters still expect economic weakness will allow the central bank to start cutting rates. With me now to discuss is BNN Bloomberg's Paul Bagnell. So, Paul, we've had about 15 minutes to kind of digest what we've heard, although we are still waiting to hear from the Bank of Canada. This, of course, in line with expectations this morning.
Yeah. Hi, Marcia. Great to be with you again. As expected, the Bank of Canada left its key lending rate at 5%. It said there was a broad consensus within Governing Council, which is the key decision-making group within the Bank of Canada, to hold the rate steady. But the bank has made, Marcia, for the first time, an explicit statement that the next move on rates is likely to be down. Now, it didn't signal any timing. It certainly didn't say the next time it makes a rate announcement, there'll be a rate cut. But it said this: Governing Council's discussion about the future policy is shifting from whether monetary policy is restrictive enough to how long to maintain the current restrictive stance. So to interpret that, translate that, that's saying we are no longer talking about whether or not 5% is high enough to hold back inflation. What we're talking about now is when is the appropriate time to move rates down. And that's the most explicit statement we've had from the Bank of Canada on the future, on the likelihood of rate cuts. The bank does say, however, it's still concerned about inflation, still concerned about what it calls underlying inflation, the forces in the Canadian economy that push inflation up. It does say that the battle against inflation is being won gradually. At one point, it says that doesn't mean we have ruled out further policy rate increases, but it says what it does mean is that if the economy evolves broadly in line with our expectations, I expect, this is Governor Tiff Macklem speaking, I expect future discussions will be about how long we maintain the rate at 5%. To translate that means when do we begin moving rates down below the 5% mark.
Speaking of expectations, Paul, we shouldn't expect the Bank of Canada to commit to a time today. It sounds like you're telling us they're saying a cut is in the future, but they're not going to give us a specific month, correct?
Absolutely correct. It doesn't want to do that. What we have seen in bond markets is that bond yields have declined, and that is largely the result of a forecast by all those investors in the bond market as to where inflation is going and therefore where central banks are going. And we often hear that the banks often feel, central banks, that the market's getting ahead of itself. And so one purpose, I think, of today's statement from the Bank of Canada is to signal that the future direction of rates is likely down, but don't get overly enthusiastic about a rate cut coming very, very soon. For instance, the fixed income market has until recently been it had placed an overwhelming probability on the likelihood of a quarter-point rate cut on April the 10th, which is a day on which the Bank of Canada will make a rate announcement. And the bank clearly seems to be saying today, although you're right, it's not specifically mentioning dates, but it clearly seems to be signaling today that is unlikely. A cut that early is unlikely. And it's signaling that by saying the battle against inflation has been successful thus far, but it's not over, and it will be uneven. We will see inflation reports where inflation jumps up periodically, and we're still concerned about underlying inflation. We're not taking rate increases completely off the table. All of those things are intended to cool down the enthusiasm over the timing of rate cuts.
Okay, and Paul, just a quick thought from you on the markets at this point. We've got the TSX and the Dow seeing some gains. I noticed that the dollar lost a little bit. Any connection between the Bank of Canada's interest rate announcement and what we're seeing happen on the TSX?
Not so much on the TSX, but definitely the Canadian dollar. The Canadian dollar lost value immediately at 9:45 a.m. Eastern Time because the market is now judging that a rate cut is likely further into the future than it had earlier forecast. The big thing driving markets today is corporate earnings. Some tech earnings in particular have been positive, and that's got stock markets moving higher.
Paul, thanks so much. Really appreciate it. We'll see you soon.
You bet.